morning, everybody. This is Frances Kath-Netadice with the Houston East End Chamber of Commerce, and it's an honor to welcome you to our COVID-19 business webinar. Today is November 17th, and we're honored to have Jose Valdez of Frost Bank, who is a sponsor of today's program. Jose is an amazing person to the Chamber, and he's also one of our board members. Hi, Jose.
Hey, how's it going?
Good. I'm going to let you say a few words. And again, thank you so much for supporting this program.
Oh, you bet. Hello, folks. My name's Jose Valdez. I'm a commercial banker and senior vice president at Frost Bank, where I've worked for the last 18 years. Now, I office out of the Harrisburg branch, which is actually on Broadway and Lawndale, where I've been the last 13 years. And as Francis mentioned, I'm a board member of the East End Chamber of Commerce. Now, I'm proud to represent Frost Bank and the thousands of Frost bankers who work hard every day to make our communities a better place to live and work. Frost has been in business for more than 150 years. It's always been a tradition of ours to give back to the communities where we operate, like we've done so in Houston. Now, the company is headquartered in San Antonio, but Houston is our largest market. It's always been part of our corporate culture to work hard, to be a force for good in people's everyday lives. And we understand that when times are difficult, people need to be able to rely on their bank. At Frost, we're proud of the effort that we put into helping businesses survive the economic effects of the pandemic through the PPP loans. Across Texas, Frost helped well over 19,000 businesses get more than $3.3 billion in PPP loans. Now, that includes about 2,800 businesses here in the Harris County area, which amounts to about $620 million in loans in Harris County. Now, that took a huge effort from our Frost bankers. During the first phase, we process as many loans as we do in an entire year. Now, employees across the company pitched in to help process these applications. We worked day and night, 7 days a week, because we knew how important that lifeline was to our customers. And we believe Frost can make a difference in our communities. Now, through everything that's happened this year, we've all learned a lot about being resilient and how approaching challenges with a positive and optimistic attitude can make a huge difference. And on behalf of all of us here at Frost, welcome and thanks for letting us be a part of this event. And we're looking forward to hearing from our speaker.
So much, Jose, for that beautiful words of encouragement from Frost Bank. I know alone we work together on getting businesses in to apply for PPP loans, and it's so very important that they got that. So thank you so much for all that you do.
You're welcome.
Great. Well, now we have our speaker, Sean Mueller. He is CPA and Chief Operating Officer at Weaver and Tidwell. Today, appropriately, we're going to be talking about the PPP tax implications, which if you did get a PPP loan, make sure that you have a pen and paper to take notes, because this is going to be something very important for you to hear from and know how to do with your PPP loan. Hey, thank you so much, Sean.
I want to give the stage to Jose for a minute. So thank you for having me, Francis, and Jose for sponsoring.
You're welcome. We're going to turn it over to you, and then we're going to get back with some Q&A. So make sure if you have a question, please put it in the Q&A, and we'll be happy to ask that at the end of his presentation. Thank you.
So just wanted to give my one caveat on this piece is that rules are constantly changing. There was a new form that was released last week, so they are constantly changing, and we will work through that. So real quickly, we're going to go through the application, some of the quick key terms, some of the reductions, which may or may not even apply anymore because of these 24-week covered period, which many of you are aware of. Go through mixed examples, then tax consequences, and then some recent updates. So an action-packed 45 minutes or so, and we'll leave plenty of time though for your questions, because I know you'll probably have plenty. So here are the applications. There's 3 applications you can apply for, and all the banks that I'm familiar with are actually offering an online process where they offer all 3 applications. And the most important thing we're going to talk about here is this Schedule A, Table 1 and 2 for the long form application. So as I said, most applications are electronic. The banks are using the electronic portals that you go through and complete all the information. You still have to gather all your information to apply through the process. You need to provide that paperwork to and documentation to the banks, but it is an online process to complete the application. Timing wise, you have 10 months from the end of your covered period to apply for forgiveness. The lender has 90 days to act, and then the SBA has 60 days on top of that to act. on the loan to approve it. And so there is a process. As you know, if you have a loan with Frost, you're one of the 19,000 customers that applied for a loan through Frost. You'll go through Frost website, submit your forgiveness application, and then they will have a period of time to review your application and get back to you. For most loans, we're seeing if it's under $500,000 or so, the banks are generally being pretty quick about it because they want to get it off their books. So they're getting back to you within a week or two, couple week time frame, and then it goes to the SBA. And as long as it's not a large loan, the SBA is not taking the full 60 days. They are approving in a couple of weeks as well. Working on a transaction right now with another bank. Bank approved it in about 10 days, and the SBA approved it in 2 weeks. So people are moving on to that. You do have to keep your documentation for 6 years, and then there are a number of representations you have to make with your application. So the first application you can complete is it should be the easy application, but they've made the S application because they already had an easy application. This applies to any loan under $50,000. If you don't meet the affiliate test, and then you spent all the money on the qualifying expenditures, you can use this 3508S form, and you don't have to worry about headcount reductions, anything like that. This $50,000 number was hoped to be $150,000. That was a lot of talk in Congress, is that it would be $150,000 or less loan, but the SBA came out and said $50,000 or less. So it does at least help the smaller business owner that it got a loan, because most of them were the most stressed about this. I mean, the PPP loan was so important to so many businesses, but even more so to these borrowers under $50,000. The next application you had was the EZ, and the EZ form and the long form 3508 came out back in June. This went through if you had no reductions in employee or headcount, or you weren't able to operate your business because of a government shutdown, you could use the EZ form. You know, the question we have on the EZ application is, if you met these standards, why did you need a PPP loan to begin with? If you made no hourly wage reductions, no FTE headcount reductions, et cetera. So this is the mother, the long, EZ that goes through the business operations, and then the FTE headcount salary reduction pieces. Like I said, unless you had a government shutdown piece, the question is, did you need to fill out this application? So this is the long form application, the 3508 that everyone was so worried about. And if you've read through the forms or you've applied, this is the form that has all the paperwork you have to complete. There is a reductions headcount schedule. There's a Schedule A that feeds into the form. And then there are these safe harbors about keeping your employees and keeping your headcount up. Those safe harbors apply to the earlier of December 31st or your application date for forgiveness. So that's why many people are applying for forgiveness, because they just don't know, how long this downturn is going to last. So might as well get it off the books now. So we're going to do these forms, just an overview of the forms in reverse order, because this is how you're going to complete the application. So you're going to start off with your Schedule A worksheet with Table 1 or Table 2. Thing to note here on Table 1, this is the schedule that you apply all your FTE reductions to and compensation deductions towards. So this anyone that fills out this form applies to any employee making annualized salary under $100,000, or any employee hired in 2020. So if you went out in January of 2020 and hired an employee at an annualized salary rate of over $100,000, you would report that employee here, and that employee would be subject to the test for reduction or headcount. This is the schedule you want to be on for all your employees, is Table 2. This is just reporting the information, but there's no reductions here on that calculations. So you'd calculate your Schedule A worksheet 1 and 2, and then here are some points around that. Employee with annualized compensation less than or equal to 100,000 goes on Table 1. Like I said, any employee hired during 2020 would be on Table 1. Everybody else goes on table 2 other than owner employees that don't show up on the schedules at all. They didn't want to reward a company for getting rid of employees, but keeping the owners around. So here's an example on the annualized comp that tended to get a lot of folks when they read through the rules. Employee makes $85,000 and they received a $5,000 bonus in December of 19, Christmas bonus, year-end bonus, et cetera. Well, their annualized compensation for the December 15th pay period is actually $205,000. So they would actually show up on table 2. So, this is a small item, but it's the way the rules were written. And, the goal of this salary reduction is to get employees out of table 1 onto table 2. So in this example here, most people would miss it because the W-2 for this employee for the year would be $90,000. But because the way the bonus was paid, there would be an annualized salary of $205 and show up on table 2 versus table 1. So once you've calculated those amounts, you complete Schedule A. As you can see, the various points here, you've got Schedule A worksheet table 1, where you put in all the compensation numbers and your reductions. Table 2, you've got your average FTEs there. And then the bottom of this schedule is for the first time is where you include employee health insurance, retirement plans, state and local, everything else related to the employee gets reported on the bottom of this. So now you've completed Schedule A of your form. Now you have to go into the continue Schedule A with your owner compensation numbers. And now you're going to come up with your total payroll costs for the PPP period, the covered period. And then you're going to go through and do your FTE calculations to see what your reductions look like. So once you've calculated all those things, you're done with payroll. And now you go to the face of the form, 3508. So line 1 is the accumulation of those last 4 forms we did, table 1, table 2 of Schedule A. Now you're going to include your business mortgage interest, your business rent, business utilities. You're going to include all those amounts and you're going to keep running all the way through the schedule. Please note on this potential forgiveness amount on line 8, 9, and 10, you're taking the lesser of those amounts. But please note that line 8 for the modified total has nothing to do with your total, your PPP loan. So you can actually outspend your PPP loan by using the 24-week covered period, which we will have an example of that later in the day. Also, I want you to know that I keep putting the wrong schedule in there, but line 10, this payroll cost at 75%, that actually is 60%. So the application you've completed or will be completing, that line 10 is payroll cost of the 60% requirement versus 75%. So now we're just going to go through some key terms before we get into the tax consequences. Covered period, as you know, begins on the PPP loan disbursement date. You have an opportunity to pick 8 weeks or 24 weeks. You can choose 8 weeks if you received your loan prior to June 5th. But if you receive your loan after June 5th, you have to use the 24-week period. Why use 8 weeks? You receive the loan, you've had no reductions, you spent all your money, and then you're eligible for EZ or S application. For those of you that qualify for the 8-week period, you probably still use a 24-week period because lenders such as Frost did not open their online forgiveness portals until about a month ago. So you had the data, you had the information, you could go ahead and just use the full 24 weeks for those folks. So why use 24 weeks at all? You didn't spend all your money, you had a reduction, you couldn't bring employees back, et cetera. If you use the 24 weeks, you could potentially outspend your limitations and get 100% forgiveness. And like I said here, the banks delayed the application portals. It wasn't the bank's fault at all. The rules were constantly changing, and the SBA was slow to release applications and allow the banks to stand up their portals. So this is really SBA driven, not your lender driven. Some people have asked questions about 8 weeks or 24 weeks. Well, I've spent my money. I want to go ahead and file before 24 weeks. Well, why would you do that? Well, one, the loan is spent. You have borrower fatigue. You've got this loan hanging over your head and you want to get it off your books. The banks want it off their books as well. And then the SBA continues to release new rules. offline, Jose and I were talking about a new SBA form for loans over $2 million that was just released last week. Potentially you could have avoided that form if we'd gotten all the applications in beforehand. Who knows? The big thing here is if you're going through an M&A transaction for your company, there are some hiccups on PPP loans. You can only have one loan per PPP borrower. So if you actually have a being acquired or you're acquiring a business as a PPP loan and you have a PPP loan, you run into some issues. And then just can you close your deal because you've got now a bank or the SBA involved in your negotiations. It's hard enough to buy and sell a business when you're dealing with one party, much less dealing with government agencies. And then on the salary FTE reductions, you've outspent everything and there's no reason to wait. So incurred and paid, a quick reminder, you already know these different things, but they did modify in June the incurred and paid definition to amounts paid during the covered period or incurred during the covered period and paid on the next regular cycle. So they did come out and clarify on incurred and paid that you couldn't prepay things, like you couldn't prepay retirement payments, you couldn't prepay health insurance, etc. It had to be related to the covered period, but you could have accrued salaries to your employees that had not been paid because the business was waiting for the PPP loan to come in that you could make up during the covered period, and those would be includable amounts. Here's just an FTE calculation. It was based on a 40-hour week. And then you have to take average number of employee or average number of hours paid per week divided by 40 to come up with your ratio. They did allow a simplified method that you could either do one if they worked 40 hours and everybody else was a half. So just a matter of looking through your calculation and what works best for your business and going through the calculations itself. Lots of questions early on about this. If you're a business that operates a 35-hour week, and then you go forward, do you have to ramp up to 40-hour weeks or can you stay at 35? The way the math works, your pre-calculation would be based on 35. So that's a lower number than 1. And then your new calculation is based on the 35 as well. So you'd get to the same spot. So nothing to worry about there. So those are all pretty much refresher courses. You should know those things if you've gone through the PPP process. These are a few things that have popped up in the last month or so that have been troubling. So one is related party rent. There were lots of questions early on about what happened with related party rent. The initial guidance was if you had a valid agreement as of February 15th, then you could have a related party rent agreement. So business owner could own his property and then rent it to the actual PPP borrower business, and there would be no issues with deducting that rent. The SBA came out and clarified that the related party rent is only deductible to the extent that there is a mortgage on the property and it's limited to the mortgage interest. So they wanted to put you on the same path as if the business owned the property. So if the business, the PPP borrower itself owned the business or owned the real estate or owned the building, they would only deduct the mortgage interest. So now they can only deduct the mortgage interest that's paid to the related party. Another bad fact here is related party, they didn't set a de minimis threshold at all. It's any cross ownership. So if your PPP borrower is owned 100% by Jose, for an example, and then Jose owns 2% of the actual building, that is treated as related party. And so you're subject to these further restrictions on rent. So just an example, as you can read, business pays $5,000 a month related to related party. Related party has no mortgage on the property. Eligible rent expense is 0. So you'll be getting no forgivable amounts for the related party rent. The other piece they clarified is owner employee. For an owner employee, as the rules clarified, you're limited to your salary calculations. You're limited to $15,385 for the 8-week covered period, or $20,833 for the 24-week period. that $20,000 number came from the original application process for the PPP was based on a 10-week period. And so it's the $100,000 times the 10-week annualized period gets you the $20,833. So for an owner employee, for 24 weeks, you could not have the $45,000 number you can have for a regular employee. So the question was, what was an owner employee for an S Corp or a C Corporation? Well, they clarified that the owner employee is anybody that owns less than 55% is not considered an owner employee. So the rationale was anybody that did not have significant impact on the business was excluded. However, if your business operates as a partnership and you have partners, it doesn't matter how much they own, they're all counted. So those are some terms there. We're going to go through the reduction and safe harbor piece here. This is how the calculation works if you fill out the 3508. You've got your eligible forgiveness amount, which includes your, as we talked about, your payroll, your business interest, your utilities, and then rent. That comes into your piece. You apply your salary wage reduction. Then you multiply it by your reduction quotient, which is your average FTEs. And you go through the calculation that way to come up with it. As you can see, measurement period, there's a number of different periods you can work through. I'm going to skip over them because we've gone through this before and you've probably done those calculations as we can continue on because we do want to make sure you get to some questions. The classification here for reduction in salaries and wages is if you had a greater than 25% reduction in the average annual salary or hourly wage, you're subject to the limitation. Now, you're only subject to the reduction in salary hourly wages to the extent you exceed 25%. So if an employee is making $100,000, you reduce their annualized compensation down to $74,000, the reduction would be $1,000. It would not be, and it would be a further haircut by the covered period, but you'd reduce it by $1,000, not the $26,000 between, because it's 75% of the $100,000 is 75. You only take a reduction for the amount less than 75%. The SBA did come out and say there's not a double counting of these things. So you don't have to be subject to an FTE reduction and a hourly wage reduction. So they did say it's one or the other for that piece. And then here is the standard language they put in here for if the government were forced to shut down or the government wouldn't allow you to operate your business, you could get an exception to that. So if you're a restaurant owner, you couldn't be open, you had to reduce the employee hours, you could be following the sword for this requirement and not be subject to the full reduction. So the whole point of the PPP loan was to make sure you hired employees and kept employees on the payroll. So they did provide some hiring exceptions. And so if you made a good faith offer to rehire, you could do that. It could count it as your as a head count. If you had to fire somebody for cause, that counted as well. On an example for fired for cause, we had an example of a client who went to rehire an employee and part of their onboarding required a drug test. The employee failed the drug test, and so they were not able to hire the person. In that case, they'd fall under either the exception of a good faith written offer to rehire or they were fired for cause. Either way, because that was part of their onboarding. If in this okay here, the back example here, client or not a client, employee comes to you and says, hey, I've got childcare issues, I'm worried about things, I don't want to come in every day, I want to voluntarily receive a reduction in hours, that would not count against you as well. So here's a very simple example of how it runs through. Borrower has a $50,000 loan, payroll only, we're forgetting about the other pieces. Borrower pays FTEs $40,000, borrower subject to a $10,000 reduction, and then they had 10 FTEs during the process. The eligible forgiveness is $30,000. They spent 40, but they had a $10,000 reduction, so they're only eligible for 30,000. Their FTE count is 80%. The 8 total FTEs over 10, so they have a further reduction there. So in this case, the borrower spent $40,000 and they're only eligible for forgiveness for $24,000. But you can just see here how the math works through. All right, here's another example we're getting to on how you can outspend your limitation and what that looks like. So your general forgiveness, the loan is limited to your PPP loan amount, the payroll divided by 60%, or calculated forgiveness amount. So in this example, the PPP loan was $500,000. Payroll expenditures were $250. That is a 416 number. You calculated forgiveness amount of 425. So you spent $250 and then you spent another $175,000 on the other qualifying expenditures. Looking at the lesser of these amounts is the 416,667, which is payroll. So in this example, the borrower did not spend enough money on payroll. They spent it on other amounts, and so they would be limited from forgiveness to 416, so they would owe $83,000 plus the accrued interest on the $83,000. Here's a FTE example. Just see quickly how the math works, and you have an hourly worker that changed their hours during the process, and how they'd come up with the FTE calculation. I'm going to skip to that as well, just to get to the outspend the limitation. Here's an example of outspending your loan for the 24-week period. You have payroll cost of $100,000. You have rent lease payments of $5,000, utility payments of $1,000. You had your salary, hourly wage reduction for $4,500. So in this example here, you spent $101,000. Actually, you spent 101 plus the 45. You spent $105,000 during the 24-week covered period. We look here, you go all the way through the math though. You had the salary, hourly wage reduction of $4,500. You only had 80% of your employees on the payroll. So your calculated forgiveness amount was $81,200. You go through and do the lesser of. In this case, the loan amount was only $70. So in this case, you outspent your reductions. So you spent $105,000 during the 24-week period. And even with the reductions coming through, you outspent the loans. You had to spend your own money to keep these employees on the payroll. And so you would get maximum forgiveness for this piece. So that's really, when you expand from 8 weeks to 24 weeks, in most cases, you will have outspent your employee reductions by increasing, the loan amount was based on 10 weeks. You take your loan out for 24 weeks, you're going to outspend your loan in most cases. All right, now 20 minutes in, we're going to go into the tax consequences. Lots of questions around this for sure. So the history here you've got is the CARES Act came out and defined loan forgiveness, and that was defined under Section 1106. They specifically came out instead of the CARES Act that the forgiven amount is not subject to tax. So it's very clear on the forgiveness of the loan that it's not taxable income to the borrower. They also came out and clarified that lenders like Frost Bank does not have to issue a Form 1099-C to any borrowers that had loan forgiveness. Normally, when you have loan forgiveness, the lender has to submit Form 1099-C to the IRS and to you so that you're aware of that. Well, it came out and said that would be too much. I mean, if Frost had to issue 19,000 Form 1099-Cs to let everybody know that they didn't have taxable income, they'd receive all sorts of matching notices. So this was an administrative burden they relieved the banks from having to do. For state taxes, there are 15 to 16 states, Texas being one of them, that is always behind the Internal Revenue Code on law changes. And so they have not adopted the CARES Act as of yet. So it is still unclear whether or not the loan forgiveness is taxable for Texas franchise tax purposes or Texas margin purposes. It is still an open point, but as we'll go through expenses in a moment, you should get to the exact same answer as a federal consequence And if not, we'd expect clarification around this because the states are a little bit slower. And we did see that last week, California did come out and say, we're going to follow the CARES Act for purposes of PPP loans. So we'd expect more states to do that as well. So the big questions on the expense side. So you spent the money that the SBA gave you or the bank gave you on qualifying expenditures. Are those expenditures deductible for federal tax purposes? The answer to that from the Treasury is no. Notice 2020-32 says that if you get a loan forgiven, the expenses related to that loan are not deductible. So we'll go through an example in a moment, but if you have a $100 loan that's completely forgiven, then your expenses of $100 will all be disallowed. So it gets you back to net zero. You will not be able to double count the expenses and the loan forgiveness. Now, when notice 2020-32 came out in May of this year, Congress came out and said, that's not our intention. We intended for the expenses to be deductible. We want to help the borrowers. But to date, they have not changed those rules at all. It is their intent that the expenses are deductible, but they've had multiple opportunities to come out and change the law, and they have not done that yet. Not to say that they won't, but they have not done it yet. So given that, we don't think the deductions are available. I know there are some other positions people are taking, which we'll go through in a minute, but the expenses are not going to be deductible if the loan is forgiven. A similar issue on state taxes. If the loan forgiveness is not taxable, or sorry, if the loan forgiveness is taxable for state tax purposes, then we believe the expenses would be deductible at that point to get you back to zero. So this comes to the question. You apply for forgiveness in October or November of this year. The lender and the SBA take the maximum amount of time to approve your loan. Your forgiveness is approved in March of 21. Well, what do you do for your 2020 tax filings? Because you have these deductions which you anticipate being disallowed, but they haven't formally been disallowed yet. So what do you do? So here's the example. Borrower has a $100,000 PPP loan for payroll only. Borrower pays $200,000 during a 24-week covered period, so they've outspent their limitation. Borrower receives the 100% forgiveness in March of 21. What's the impact of this? Well, for 2020, the $100,000 of expenses are disallowed that were spent. You spent $200,000 of your money. You spent $100,000 PPP loan plus another $100,000. So $100,000 that's forgiven is not deductible. And then in 2021, the $100,000 of PPP loan that's forgiven is not taxable to you. So $100,000 is excluded in 2021. We've talked about the state tax implications. What do you do there? In Texas for a loan, you could have a situation where for 2020, you would allow the expenses, and in 2021, you would actually pick up the income if Texas doesn't change the rules in some other states. For estimated tax payments, it's for 2020. If you actually had a profit for 2020, did you make estimated tax payments in September and then also in January? What did you calculate your estimated tax payments on? Did you include the expenses as a deduction or not? If you included the expenses as a deduction, you're going to be underpaid for estimated tax payments, and you may have a penalty for underpayment of those estimated tax payments. Here's another example here. Borrower, same loan of $100,000. They only spent $80,000 during the covered period. We're ignoring any sort of FTE wage reductions, but you would have those reductions based on this. What's the impact? Well, the impact here is $80,000 of expenses get disallowed, and then the $80,000 of income is excluded in 2021, and the borrower would owe $20,000 plus interest. Same issue on the state taxes and same issue on estimated tax payments. This is just to show the matching of the forgiveness with the actual eligible expenses you have to disallow. So here you've got the timing. We've hit on it. 2020 versus 2021 or later, if it takes a longer time. We currently believe that you shouldn't file your 2020 tax return until forgiveness is wrapped up. So you know the correct answer for your tax filings. There are some positions that could you disclose you're taking the position? Could you file your 2020 tax return, claim your expenses that you expect to be forgiven that haven't been forgiven yet, and just put a disclosure in your tax return saying we're claiming these expenditures? Some firms are taking that position. We prefer that you just hold your tax return until you get forgiveness. Here is a protective refund claim. With congressional intent that the expenditures could be deductible, if you choose to file, if you do file your 2020 return, you don't claim the expenses, you could file what's a protective refund claim. So you could file an amended 2020 tax return claiming the expenditures in the event that Congress came out and changed their mind and actually codified that the expenditures are deductible. So that's what we're looking at right now. But the safe answer in all of this is to hold up filing your 2020 return until you've gotten forgiveness figured out. And as I mentioned at the very beginning, and Jose can vouch for, if your loan is not sizable, the lender and the SBA are getting through your forgiveness application fairly quickly. So you should have some resolution here pretty quickly. So here's all the documentation. You obviously pulling all this information together for your application. There's a lot to worry about here, a lot of information you've got to keep together. This is just your list of what you have to keep together. And then you have to keep all this information on your base periods, all your different payroll calculations you have to do, which you've probably gone through the headache and time strain on all those different things you've had to do. Here's a borrower certifications you have to make here. So these are all things you have to sign off for in the application, proving that it's all good and right. So you've seen that if you've completed the application. Wanted to give you a few updates on M&A transactions. As I mentioned earlier, if you have a pending M&A transaction, you may have to get lender or SBA approval. Here are the qualifications. For lender notification, if you're selling 20% or more of your business or 50% or more of your assets, you have to notify your lender. And what the lender and the SBA are requiring in this case is that if you're applying for forgiveness and it hasn't been completed yet, you actually have to have an escrow amount or an escrow account equal to your loan amount put with the lender to secure the loan while they're working through forgiveness. So that is just a headache to deal with. You borrow $100,000, you've spent it all, you're going through an M&A transaction. If the SBA has not approved your loan, you're going to have to put $100,000 in an escrow account at the lender until forgiveness is granted. If you're the buyer on that side, that means extra money you'll probably have to come up with, because chances are the seller does not have the PPP loan proceeds to set aside an escrow. In this case, if you do have they do allow you, if the buyer has a PPP loan and the seller has a PPP loan, they do allow you to have multiple loans. But in this case, the buyer also assumes ultimate responsibility for the PPP loan. So that's another thing to worry about in due diligence on both sides. Here's the last present that the SBA gave us last week. This applies to all loans greater than $2 million. There's Form 3509 for for-profit businesses and Form 3510 for nonprofit. This form has been released in draft form. It is due within 10 days of request by the lender. Jose and I were talking earlier about that. Most of the banks are getting their arms wrapped around it, but as of last week, they were not aware of this requirement. So if you have a loan over $2 million and you've applied for forgiveness, I would anticipate you receiving this form to complete for the SBA approval process. And the whole purpose of this form is that in April, early May of 2020, the SBA came out and said they're going to take a special look at any loans over $2 million. This is a series of questions where they're trying to determine if you should have had a loan or not. Some of the things they're asking for is they're asking for you to compare revenues from the second quarter from 2019 to 2020. So they're expecting to see a reduction in revenues. Did you have a COVID shutdown, either government imposed or you voluntarily shut down because the business wasn't there, your supply chain was interrupted, et cetera? They want to know your liquidity. They want to know what you had on your balance sheet in cash when you received your loan, actually on March 13th, and then what you've done with that. Have you prepaid debt? Have you made a lot of payments to owners? The magic number for owners in this case is $250,000. So if you've made payments to owners, annualized basis of more than $250,000, you have to report that. The other questions here is, how are you owned? Are you publicly traded? Are you owned more than 20% by a public entity? Or are you owned more than 20% by a private equity group? So if you answer all of these different questions, you have to provide all the documentation. You have 10 days to do that and provide that to your lender. And this is all for the SBA to determine if you even should have received a loan to begin with. So they've raised their ugly head again back in May. Many of my clients were worried that they should have had a loan to begin with, given the fact the SBA changed the rules on everyone. And this is just their way to document that and test to see if you get a loan. So I have flown through all this information the best I could so we could get to questions. And it looks like we've got about 15 minutes to answer questions. So Francis, I spoke really quickly, so hopefully you're ready.
Thank you. Thank you so much. That was very, very important information. And I know a lot of people have applied for PPP loans and now this is helpful information. And then Sean, if they have any questions, I see your email address is in your subject or your name down below.
Right.
May they contact you?
Absolutely. Feel free to reach out with me and we'll be happy to help out.
Great. So our first question here is, what is the most significant oversight that PPP loan recipients might overlook in staying within compliance?
So the one would be the related party rent. If you do have that, that's very common with our business owners, as probably Jose can attest to, missing that calculation. And then actually adequately calculating their wage number. And what table do you show up on table 1 or table 2? Those are the two big things that we're seeing.
That's good. And then another question here is, can you give an example again of payroll costs incurred but not paid that are eligible for forgiveness?
That are incurred and not paid. So if you have a covered period that ends on October 5th, I'm going to make up a date. That's, I think, within the 24-week period. Your covered period ends on October 5th. Your employee gets paid on the 15th and the 30th every month. They will have been paid on September 30th. And so for the days October 1st through the 5th, they will not get paid until October 15th. So the compensation from October 1st to October 5th is incurred during the covered period and paid by October 15th, which is the next scheduled period. And so those 5 days of payroll will be included in your calculation.
Good information. And Jose, chime in if you'd like to help with any of these answers as well.
I'm probably going to defer to Sean to most of these questions.
Good. Another question is, if an employee exceeds $100,000 annually salary, is the employer's entire compensation ineligible for those costs up to $100,000?
No. So if your annualized compensation is over $100,000, you are just not subject to the wage and salary reduction. So you end up going on table 2, but you can pay that person up to the annualized $100,000. So if it's an 8-week period, it's $15,833. If it's a 24-week period, it's $45,612, I believe is the math. You can pay them up to $45,000 and that counts into your payroll calculation. So that's the best of all worlds, is that you fall outside the $100,000 cap and then you get to count in the payroll calculation.
Great. So another good question here is, what about the small mom and pop shops with less than 10 employees and solo, I guess I'm not sure what this.
Proprietorships?
Yes. Is there any PPP support?
Well, I mean, they would follow, in that case, they probably fall under the S calculation. So they have a loan under $50,000. And so then it's just a matter of making representations that they've spent all their money on qualifying expenditures and they're home free. And so in that case, in almost every instance I've seen with small mom and pops like that, if they look at a 24-week period, they far exceeded their loan amount. And so they should be able to complete the S election and get maximum forgiveness in about a week or two.
Good. Another question here is there any support for businesses that rely on 1099 employees?
Unfortunately, 1099s don't count under the payroll calculation, but then the question would be for 1099, for folks that rely on 1099s, how did they apply for their PPP loan to begin with? Because your PPP loan was based off W-2 employees and your partner owners. So if you've got 1099 contractors, you shouldn't have gotten a PPP loan to begin with.
Great. Here's a question. This person is confused about the 8-week versus the 24-week period. And I know it was a great slide on there, but any tips to differentiate confusion between the two? Yeah,
sure. So to clarify that piece on 8 weeks, that was the original covered period that came out back in April. They clarified those rules because people couldn't spend their money. So we were running into issues and we go back in time to May or June, which nobody wants to go back in 2020 and relive it all. But when you go back to May and early June, we weren't going to be able to spend our money. So what are we going to do? We needed more time. And so when they came out with the PPP Flexibility Act in June 4th or 5th, they came out and said you can use an alternative period of 24 weeks. So they expanded the period, your covered period, to 24 weeks. So you had more time to spend your money. So most people back in June were debating 8 weeks versus 24 weeks. It seemed like the magic number was most folks were spending their money within 10 to 12 weeks and they wanted to file. Well, the SBA and the bank saved us there because they weren't accepting applications until end of September. So most folks are going to use the 24-week covered period for their purposes. So the only downside of 24 weeks is you've got to capture all your data for 24 weeks versus 8, which is voluminous. But the 24 weeks is probably the best period for any borrower.
24 weeks. Okay. And then one other question. Can you still use the easy form with the 24-week period?
Absolutely. The 24-week period is eligible for the S form, the EZ form, or the 3508. You can use all 3 forms for that.
Great. There's another question here from today's program. I see that the company is eligible for the form 358S. Who do they turn that form into? Prior, they thought that they needed to use the easy form and have been waiting on the email to upload the information. And what do you do for the 358S form? They've exceeded their loan amount by $33,100 with their payroll.
So what I'd like to say, this is a terrifying thing to think because I have no idea what question you're about to ask me. So, but that's the point. But going to that point, most lenders have all 3 applications on their portal. And so if somebody has completed the 3508 EZ already, then that application should be fine and be accepted through the system. But if they wanted to go back to the portal and resubmit the 3508S, I think that's a question of, talking to Jose and your banker to find out if you could go back and resubmit that form. But if they've exceeded by $33,000, the fact that they've completed the EZ form, they should get maximum forgiveness and they can move on down the road and put this all behind them.
Good. And another question here is, you mentioned sorry about that. You mentioned to hold off on 2020 taxes until the forgiveness has been granted. Right. Should businesses be concerned about filing late?
Well, if they file their application now and their loan is under $2 million, I would anticipate them getting all their forgiveness answers prior to year end. We're not seeing the SBA drag this out too long. So you have until March 15th to file your return. So I wouldn't anticipate that being an issue. But if they've got a large enough loan that they haven't pulled their paperwork together, they're probably already extending, and there's really not much of an issue there. But I do expect this audience to be on the smaller side of loans, and so they are worried about filing on time. So if you've gotten your application in, you should know about forgiveness here by year end.
Great. And so one person said this is very good information, and someone else wanted to know if this presentation will be available to review again. Will you allow us to put this on our website, or can they email you for a copy of it?
I'll be happy to share it with you, and you can put it up. That's fine.
Great. We'll put it on our website, and then you've got his email in the corner if anybody
Yep.
wants to reach out to him.
Yeah,
for
and my
a
email will
copy.
be on the contact information too, I think, if you had initially. So yeah, sure.
Good. And then what is probably the most important takeaway for today that you want everyone to take away?
Well, there's still more to come on the tax consequences, really. Texas has not come out and made a definitive opinion about what you're going to do. We think that Texas will follow federal and they'll adjust for it. But that's the biggest takeaway, is what to do with Texas on your loan. And just get through this process and put it behind you as quick as possible.
This is hopefully I'll be able to ask this. This is a long one. This company. It's a temporary employment agency, and it's hard to maintain full-time employees. But they are filing the Form 358EZ and impacted by government shutdown. Do they have to worry about the full-time employees, or will they be okay because of the shutdown?
They will be okay. They will have an exception. They should have an exception because of the government shutdown. So they should be okay. They just have to document how they were shut down. I wanted to hire everybody, but the government wouldn't let me. They should qualify for that exception.
Great. And Jose, have people been contacting you about their PPP loans and forgiveness, and what kind of help do you see that you can give to your clients?
Oh, you bet. I think every bank is handling it a little different. We've set up a support group that you can call from 9 to 5 and answer those kind of questions. Yep. So I'm not involved in that process.
Okay. And maybe we'll get that number for you, and we'll put it in the chat down below and on the Q&A on our Facebook page.
You bet. And that is solely for Frost Bank customers.
Right.
Yeah.
Perfect. So in closing, Sean, is there any words of encouragement or any other things that have come up that you want to share with the audience today?
I just would say that, we've weathered through a lot. Hopefully we get some normalcy back as we head into 2021. Obviously, a vaccine is shortly on the horizon, and let's get PPP behind us. And we know there'll be another stimulus package coming out in the spring that'll hopefully be more working capital driven to really help our businesses sustain themselves and, keep your head up. I mean, it's a resilient group, and we'll be back stronger than ever.
We truly are resilient. And Jose, any closing remarks that you want to say?
Well, I just want to make sure that you guys can reach out to any one of us, Sean or myself. You have our emails, and I think you're going to have this posted with our contact information. So feel free to reach out anytime and come pay us a visit sometime.
Great. Helpful information. Thank you both so very much. And we'll be back again next Tuesday for another business webinar. Have a great day, everyone.
Thank you. Appreciate it. Bye-bye.
All right. Bye-bye.